All right, it's this week's Money Minutes. Ryan Payne, Courtney Dominguez. Here we are in the hot summer heat here in Soho today. Today what we wanted to talk about is, as you're saving your money and investing it, you have different options on how you can invest it. And we live in a world today where almost everything is automated. I even have one of those vacuums. It's like a circle, and it's like a robot. It cleans my floors. I don't have to do anything. It's like everything's an algorithm. Everything's done with robots. You can do the same thing with your money now. You have these things called robo-advisors, where they're actually run by algorithms. You don't need a human at all to run your money.
Robo-advisors can be a really good place to start out. When you're just starting saving, it's a really good way of kind of making a simplistic form to your investments, and it's a cheaper way of doing that you can get kind of a one-size-fits-all idea where they'll put you into certain categories and it gets your money working for you. But as you start to grow your money, it's worth having a plan that makes a lot of sense to you. Not a one-size-fits-all, but very specific to you. And that's where an advisor can come in. So we just want to talk about some of the pros, some of the cons of using a robo-advisor, because it's becoming a really trendy thing to throw out of, are these things good or not? And I think there's a time and a place for them, but we want to talk about when that time and when that place really is.
Look, robo-advisors can be great. I actually have two of them. Great place to start saving money. They're low cost. Again, you have someone making decisions automatically for you as an algorithm. They're diversified. But the thing is, as you start to accumulate money, it's not necessarily the best place to have your money anymore. So we want to talk about 4 things you want to keep an eye out for that says maybe it's time not to use a robo-advisor anymore, but you need a real human being.
Number 1, there's not great diversification when it comes to these robo-advisors. And when it comes to your money and you've really started to accumulate some, you want to make sure it's really specific to your own goals. And some of these may not have as much international exposure as you want, or maybe they don't have things like real estate or whatever it is that's going to make sense for you and your planning. You want to make sure you can find those nuances. One of the things Ryan and I have talked about in our recent videos, and click below if you haven't seen that yet, we talk about the evils of bond funds and why this is not a time that you want to be in them. A lot of these robo-advisors, their safe option or their bond option are often bond funds. That can be a reason you want to start to diversify out of that so you can get your own bonds and not be stuck in those bond funds.
Okay, number 2, taxes. If you guys have watched any of our old videos, check them out. We talk a lot about saving money in taxes. Our favorite line is, money saved in taxes is just as green as any money you can make invested. And a robo-advisor is not going to be able to make those nuanced decisions about where do you put your most tax-advantaged investments. Do you use a Roth IRA, Roth conversions, things we've talked about, where there's so many things you can do from a tax perspective that a robot is just not going to be able to help you with.
Number 3, a robo-advisor isn't able to make a whole unified plan between all of your different investment accounts. As an example, an advisor may do something like look at your 401k as a longer term asset, make sure this one's a little bit more aggressive for you, whereas your shorter term investments are a little bit more conservative. You need all of these things to work together for you, and having a person who can oversee all of that is one benefit you generally cannot get from a robo-advisor.
Okay, and lastly, number 4 is advice. Look, investing in the markets is very emotional. Back in December when the markets all sold off, they went down really low, most of the money in robo-advisors were going to their cash option. And the reality of it is, especially if you're accumulating wealth right now, that's the best time to buy stocks. But if you don't have someone playing bad cop, telling you, no, this is the time you have to buy, you're not going to take advantage of those emotional times that are really going to create your wealth for the long term. There's statistics out there that say that an advisor can help you increase your returns by 3% a year. That might be a little high, but the reality of it is you need someone to be that regulator. I always talk about us being like your personal financial trainer. You're reaching for that chocolate cake. We're saying, no, you have to get on the treadmill, make those hard decisions so you're happy in the long term. That's a real important component to investing your money.
Robo-advisors definitely have a time and a place. We don't want you guys to steer away from them. But it's a lot like some of those apps out there with your health. Like we have things like our Apple Watches that track our pulse, and we can track our nutrition and make sure that we're healthy. But
Too
it
much
doesn't mean
information.
too much information sometimes, exactly. But it doesn't mean that we shouldn't necessarily go get our physical once a year and have that person who's going to oversee and make sure that all that data still makes sense for us. It's good to have some of these things that help you automate and simplify your financial life. But there may come a point as you start to accumulate your money that a financial advisor may make sense.
So you might be thinking to yourself right now, okay, I'm building my net worth. I'm ready to start talking to somebody. I have more nuanced issues that I want to address. We do complimentary reviews every single week if you qualify. If you put the header of this video, send in an email to moneyminutes@paynecm.com and see if you qualify for a financial review. get all these things figured out, get yourself a game plan, get yourself on your path to financial independence. That's this week's Money Minutes. You can subscribe below, and as always, be bullish.